welcome back. Let's take a look at what's happening in the commodities market now. Starting with oil, we have Desola Shimoni, senior analyst, financial derivatives company, join us via Zoom. Great to have you, Desola. Good morning.
Good morning, Larry. Great to have you too. Thank you for having me.
It's fine. Yeah, you're also having me. Well, moderate gains we're seeing with Brent and WTI in early trade today. Is China demand outlook starting to look any better?
Thank you for that question, Larry. So at the moment, let's start by saying that the oil market is quite tight because of the sanctions of the EU on Russia. So we are seeing Russian oil vessels now travel further distances to look for customers for their oil. So that's the general backdrop. So we also seen some volatility in the oil market. Like you said, we saw better than expected trade data from China. China's trade, they showed a bigger than expected trade surplus, which is positive for the economy. It bodes well. It kind of signals an uptick in economic activity in the coming months, coming days, weeks, and months, which is positive for oil demand growth, given that China is the largest importer of oil globally. In addition to that, we're also seeing a weaker dollar. The US dollar weakened by about 0.16% against the basket of 6 currencies. And usually, because because Brent is denominated in US dollars, whenever the US dollars weakens against the basket of other currencies, it makes Brent cheaper to holders of other currencies. In addition to that, some analysts at Goldman Sachs, they see oil reaching about $100 per barrel on tighter U.S. supplies and a recovery in China's demand. But overall, I think the more important issues for today, for this week, is markets are looking at the testimony coming from U.S. Fed Chair Jerome Powell to see cues about U.S. monetary policy and also the pace of rate increases. So that is an important factor coming in today and tomorrow, which the market is watching closely, and that will determine also the direction of oil prices. In addition to that, there's also expectations of some data coming on Friday from U.S. non-farm payroll data, which again is going to show whether the U.S. Fed has more headroom to tinker with monetary policy going forward, and all of these have big implications for risk sentiment in the global market as well as oil prices.
And definitely, Jerome Powell has the Fed chair has a very busy day today. He's going to be testifying with Congress, and let's look at the Russian oil price cap now. How's that playing into the supply in the global market?
I think it's having a mixed effect at the moment. Like at the moment now, Russia's oil vessels, I mean, the EU plays the cap, so they're not going to buy, I think, above $65 per barrel, if I'm not mistaken. So in order to be able to still get some higher revenue from oil, Russia's vessels carrying oil have to travel further distances to Asia, for instance, India, so that they can sell oil at the current market prices rather than selling to EU countries or to the G7 or the EU countries that still impose the cap. And that is part of why we are seeing the tightness at the market, tightness in global markets at this time. It also shows that the global markets are vulnerable to any supply disruptions. So, for instance, if suddenly Angola is not able to export more oil, or Nigeria, there's some attack on oil infrastructure in Nigeria, for example, to have big impacts on oil prices at the moment because of the tightness in the market.
Looking at this, back and forth movement with oil prices so far, do you think the bulls should just, the oil bulls should just pack up and leave at this point? Because it looks like the trajectory is down for prices.
I mean, like you said, background is many factors are driving the markets at the moment, Ladi. Like you said, we have already a tight market. There's still some uncertainty about the direction of monetary policy globally. We still have a restrictive monetary policy, a contractionary monetary policy, and the markets are looking for some positives in the market. We're looking for positive data that would indicate the direction or the pace of monetary policy in the US and globally, and those are some of the big factors are driving the oil market. For example, inflation in the US has been a little bit stickier than expected. We saw a decline only by 0.1 basis points for January to 6.4%. The market expects a bigger decline. Over the weekend as well, the ECB already, the Christine Lagarde, the president of the European Central Bank, has indicated that, they are probably going to increase interest rates in Europe at the next meeting. So there's still some uncertainty, and all of this, Ladi, it affects the sentiment, global risk sentiment. And if there's a risk of sentiment, then that is also going to weigh on oil prices. It also affects economic activity because, as this central banks globally still increase interest rates to put a lid on inflation. It also kind of drags economic activity, which further reduces the demand for oil.
And looking at LNG prices, last year it hit the high of about $10, last year, but it's looking like it's going farther away from that $3 support. Now it's about $2.69. Are you seeing any recovery with those prices?
This, again, energy prices, energy markets have been quite volatile from mid last year, and are still going to remain volatile. But for LNG, the biggest factors, there are three big factors that are driving LNG prices at the moment, Ladi. First one is weather conditions. We are seeing a mild winter, Ladi, and even when we see cold spells, the cold spells have been quite short. They last maybe a few days or a week at the absolute most. And with this milder or warmer winter, it means that the demand for oil, the demand for heating, and the demand for LNG is also going to reduce. And because of lower demand for heating and LNG, we are seeing a ballooning of LNG stockpiles in Europe. For example, data from Gas Infrastructure Europe shows that gas storage or LNG in storage is still about 59% full. That gas storage is still about 59% full and about 19% above a 5-year average. So we are seeing huge storage, huge stockpiles of natural gas. We are also seeing bigger imports of natural gas coming from North America, coming from the Middle East. So all of these factors together are putting pressure on natural gas prices in Europe, and that's why we see prices trending downwards at this time.
Yeah, as I said before, the trajectory does seems like it's downward for these energy prices, which is good for the inflation story, globally. But let's look at some of the debt markets. Now, we see the T-bills here and interest rates for the 364-day. That rose to a record 9.90% per annum. What's driving that, and what impact will that have?
So, thank you for that question, Ladi. So, like you mentioned, we are seeing prior to this, treasury bills prices have been quite low, but this increase, I think, is because of the central bank is trying to. I mean, we saw what happened with the Naira redesign policy, and the central bank, I think, they're trying to mop up some excess liquidity in the banking system, at least the banking system, and that's part of why we are seeing treasury bills prices, I think, trend upwards at this time.
And looking at the domestic commodities market, what are we seeing there? Are we seeing some prices, going down at this point, or is this still upward movement?
It's a mixed bag, Ladi. So for domestic commodities markets, if you look at the price of perishables like peppers and onions, you see the price decline. For instance, the price of peppers are down 12% month on month to 15,000 naira. I also seen the price of onions down 8.6% to 32,000 naira. And this is partly because of the the Naira design issue, the shortage of cash in the market. So because of that, the sellers of these commodities are having to sell their products at a discount in order to trade, and that is part of why we are seeing those commodities are trend downwards. We are also seeing some prices remain relatively unchanged, again, partly due to the scarcity of Naira and also the pressure on the online payment systems. We are seeing the price of rice remain flat at around 40,000 Naira. I think the price of flour also remain flat around 29,000 naira, and price of cement at around 4,300 naira. So that's mixed bag. We're also seeing some prices trend upwards. But overall, I think the trend is going to be downwards, mainly because of the cash shortage. So people there's a slowdown, there's a drag on economic activity, and that is part of why we expect that going forward, some prices of domestic commodities prices will trend downwards.
All right. Thank you so much, Dr. Disola Sumoni, Senior Analyst, Financial Derivatives Company. Thank you.
Thank you for having me.
Yeah.